Right, welcome to our head and shoulders tutorial. This is quite an important pattern. It's quite a strong reversal pattern most of the time, or nearly all of the time, I think we can quite happily say. This is actually the pattern that caused, well, it didn't cause the crash of the stock market, but it was the pattern that formed at the top of the 2008 crash. So this pattern formed and the market crashed. So you can see why it's such an important pattern. We can get this on all sorts of shares, and it's basically a top-in pattern, meaning that we've had an uptrend, this pattern forms, and now we're going to have a downtrend. So yeah, let's go on because it's quite an important pattern. Okay, so this is actually, at the time of this video being filmed, this is actually what's happening on Barclays. We actually made a couple of videos about this before it happened, saying we thought that there was a head and shoulders developing on Barclays, and it looks like that's actually what's happening here. We've had a strong uptrend on Barclays. As you can see, it's stayed above the support line. We started to get what looked like half of a head and shoulders forming, so we had to watch very carefully what happened next. It actually got below the support line, and it's in the verge of completing the head and shoulders pattern. There is a chance on this. The first circle is the left shoulder, the middle circle is the head, and the right circle is the right shoulder, but there is a possibility that them two last circles could actually form into one. What we mean by that is that could actually be the head. What we could get is another bounce with a lower high, and that could be the shoulder, making such a bigger head and shoulders. So just to recap, the left shoulder we're quite happy with, the first red circle. The two, what the two other red circles are circling could end up being a head, or it could just be a head and a shoulder, as we've done it there. But what we know is, if this is a valid head and shoulders, which looks like it is, we should get around £2.50 a share. So that's quite a drop. It's quite important that you know how to trade these and you recognise these. If you're someone who invests and doesn't trade, it pays to know what patterns like this mean, because what you can do is just sell and then buy back in a few weeks and get a lot more shares for the same money. So it's quite an important pattern. So another example on Aquarius Platinum, we had a left shoulder, what looked like a head, and a right shoulder. The key is the head has a higher high than the left shoulder, but the right shoulder has a lower high than the head. The reason why the head and shoulders is a top-in pattern, and this is quite a good little tip here, because not a lot of people really realise this. They think, oh, a head and shoulders is a reversal pattern and that's it. But there's a reason why it's a reversal pattern. If you look at the start of that rally, you're making higher highs every time and higher lows. The left shoulder, it makes a higher high than the previous and a higher low. The head makes a higher high, and normally does make a higher low as well. In this example, it actually, yeah, it did make a higher low ish. And the right shoulder is the first time in that little uptrend that we make a lower high. Then what we need to watch out for is, are we going to make a lower low? And in fact we actually do. So it's a sign that the uptrend, a healthy uptrend, will always have higher highs, higher lows. The moment you start getting lower this is getting confusing. The moment you start getting lower highs and lower, maybe even lower lows, that's a warning sign that you're not actually maybe in an uptrend anymore. It might well be, if you're in quite a solid uptrend, it may well be just a period of consolidation. But this isn't a solid uptrend, this is just a very precarious small uptrend. The head and shoulders, as you can see, caused the price drop down to 50p again. So that was a top in head and shoulders. Right, so we sort of touched on it or hinted on it just then. A head and shoulders represents an early sign of a trend change. What it does not guarantee is, it does not guarantee that you're going to go from an uptrend into a downtrend. What it does guarantee is, at the very least, what you will get is some sideways consolidation. but more often than not, because people recognise the head and shoulders, the support of the head and shoulders is quite important. Once that goes, you are then pretty much in a bear market. So it is the first sign quite often. And as I say, if you're an investor and you don't wish to trade, if you just learn this pattern alone, you could probably make quite a lot of money when it happens, because you can increase your holding. Investors buy shares and just hold them and only sell when they've gone up by quite a lot. Traders will be in and out of trades, trying to trade price movements. But if you're an investor and you can actually see one of these head and shoulders and you sell near the top, then all you need to do is wait a couple of weeks. The price will be lower 9 times out of 10, and you can increase your holding and make some money that way. Right, so just going over what we've already touched on, it represents a topping pattern most of the time, which is often the point where uptrends reverse and a new downtrend starts, or a new trend. As we said, it may well go into a trendless sideways consolidation for a while before either going up or going down. The first sign of a head and shoulders is a lower high. There's some important things that you need to know about this, and you need to know how to trade the volume, because quite often in a head and shoulders you will actually see the volume change in a certain way, and we'll go through that on our advanced tutorials, because it's a little bit too advanced for this one, but it's a very good telltale sign of a head and shoulders, or something that looks like a head and shoulders forming, but because of the volume you know there's a good chance it isn't a head and shoulders. It's a strong reversal pattern and it works quite a lot of the time. The 2007-2008 crash actually had a head and shoulders, and it's quite interesting because at that point a head and shoulders was forming. It was near enough formed on the market and the news was still positive. There was no negative news. It wasn't until we started to form that right shoulder, that last shoulder, that the news started turning negative about the loans in America, the Lehman Brothers, the banks, the credit crunch was starting, but it already was showing in the charts. If you put your head in the sand and you didn't know anything what was happening in the world, you still could have traded that stock market crash because of this pattern. And that's an argument we're going to another time, because they say fundamental news comes out in the charts first, and it certainly did on that occasion. Right, so we've got an example of a head and shoulders here on Royal Sun Alliance Insurance Group. We was actually trying to trade this, but what we will actually do is we'll go through this on our advanced tutorial, just so you can see what happens when a head and shoulders fails and how to trade it. What else we'll go through is projections, because when you get a head and shoulders it actually does give you a projection lower as a target. And nearly all of the time on head and shoulders you can go back, use this projection, and the price would have fallen to that level and then it would have started to rise, and it's really clever how it works. But yeah, on this example you can see that the head and shoulders actually failed. Maybe the head and shoulders wasn't quite big enough to be a topping pattern, but it could have been, it could quite easily have been. We remember on this, the head and shoulders formed and the FTSE started rallying. Everything in the FTSE started going on a bull run. It dragged RSA up with it. But anyway, we will go through the importance of volume, what happens when a head and shoulders fails, when a head and shoulders is starting to fail but might still not fail. There's quite a lot on head and shoulders because they're quite common. There's a lot to it. So we'll go through that on the advanced tutorial. But hopefully you've learned something today, and hopefully if you see a head and shoulders, you'll sell a head and shoulders. False alarm, we cannot conclude a head and shoulders tutorial without showing you this one, XI Energy. Right, well, XI Energy was a bit of a bubble with the rest of the oil sector at this time. As you can see on here, it is a very obvious head and shoulders. If you look at the head bit, there's nothing that I actually want to point out to you, but around that time I was actually watching a forum where people were posting information about XI Energy, etc, and there was someone on there who said that he'd remortgaged his house to buy XI Energy shares. There was a lot of talk about it hitting £7 per share when it was around £3.50 a share. As you can see by this chart, it never did make that £7. But there was just this huge euphoria that, you know, this share had gone from, like, you know, it was 2p in, I think, 2009, 2p a share. But anyway, I mean, it sat around 50p for a while and then went up to £4 a share. That is a huge return. So when, you know, if you can't read charts as an investor, you might think, well, it's gone up that much, it's going to go up even more. And as I say, this geezer said that he did remortgage his house to buy shares. And you know, as a chartist, when you sort of know what's going to come, and you don't want to hear it, but it just goes to show you, if you did actually know how to read charts, then you could see that the problems coming. We sold on the right shoulder. We got out of there because we could see what was happening, and then the drop came. Everyone acts absolutely like a headless chicken, surprised, you know, and stuff like that. But it was all in the charts. Simple head and shoulders pattern would have saved people a lot of money. And you know what, traders would have made an absolute fortune out of this. You get lucky buying at the first stages of this sort of you know, uptrend. If you got in around 40-50p, then you're lucky. But as a trader, once you've seen something go up that much, everyone knows about this company now. And as a trader, you know something that's gone up that quick, it's just not going to last. So you watch the charts, you see the head and shoulders, and you go short. And traders would have made a hell of a lot of money out of this. But yeah, this is a head and shoulders in its prime. This is what you want to be looking out for. This is quite an obvious one, so don't always expect it to be this obvious, because sometimes they're a little bit more obscure, but this is textbook stuff.